Good morning, fellow traders from each and every part of the world that you're joining this series of the morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one financial partner and broker in Kenya and beyond. Now, we will begin with our usual process of looking at fundamental analysis to see how data printed moved market direction. Then we shall switch to technical analysis to see possible entries and exits as we look into the future, what we expect or speculate market to play out from. But before we dive right into it, I would like to mention that this is going to be a pre-recorded YouTube video. You can revisit it at our YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you are not left behind in future educative content that we post from time to time. So I will give a 3-second moment of silence to allow you to do that. Then we shall proceed with ease. Thank you. Now with that out of the way, let me share my screen. We look at economic data, which was printed last week as we move into this week to have an outlook on what transpired and what is to transpire and the effect of that on the financial markets, which affects all asset classes in question. So as we all know, on Friday we had the grand labor data printed, which is the non-farmers payroll, which shows the number of people employed in the United States away from agricultural sector. May filter that to 6th of December and apply. Very nice. And a lot this data came out positive, higher than expected, but the chart printing did not go as per the principles of fundamental analysis aligning with technical analysis. Going to look into that. So before we dive in, the non-farmers payroll came out at 227,000, which means 227 people got jobs away from the agricultural sector. The one that was precedented was at 200k. So we see we are 27,000 above what was anticipated. And the previous, which is actually a revised number, is at 36,000. But if we remember the first Friday of last month, it came out at 22,000. The reason it came out at 22,000, the lowest we have seen in quite a number of months, it's because of the attributed hurricanes which happened in the southern part of the United States, which interfered with the job acquisitions and everything. This came quite much as a shocker, but we see the price, the data which was printed for non-farmers payroll came out higher than expected, so we are back on trail. But hey, wait a minute, we shall see on the chart, data printed should show that the US dollar is strengthening, but we shall see a little bit of hesitance towards that market direction. We shall be explaining why and what we expect looking into the future. Remember, the non-farmers payroll can be termed to be the grand labor data, which labor data and inflation data compose the components to influence central banks so as to adjust inflation rates, of course, through using the tool of monetary policy, so as to have favorable employment and quite favorable also inflation, which is basically the prices of household goods, housing, and also transportation. So back to the non-farmers payroll. This higher than expected price print would strengthen the dollar, should strengthen the dollar, but the unemployment rate, which also came out during the NFP data release, shows at 2.4% print, And this, not to get mixed up, these collect data in quite a unique approach, in that it shows the number of people who are actually unemployed, which should be interpreted separately from the number of people who got employment. To simplify it, the number of people who got employed away from the agricultural sector came out quite high. Yes, we understand that aside. And the number of people who were not employed and do not expect to be employed came out at 4.2%, which is in line with what was anticipated at 4.2%, but slightly higher than the previous month at 4.1%. So we see a slight increase in the number of people who do not expect to be employed. So this is, of course, going to have a push and pull data print by the candlesticks, which we are going to demonstrate in a few. So jumping right straight in. We see that for beginning with the asset class currencies, we see that for major pairs, with our usual suspects, beginning with Euro USD, we see that price was printing to the downside, making lower lows, suggesting that the USD is weakening as compared to the euro in this aspect. Would want to see now price print higher, suggesting that the US dollar is regaining its strength as compared to the euro. Let's go to a higher time frame to have a clear aspect. Beginning from the daily, on Friday, we see the candle that was printed closed with a long wick above, suggesting much more of a rejection to the downside. If we go to a lower time frame, which is the 4 hours in this case, we see that price is attempting to print in a bearish trajectory. Would anticipate it to close below major key areas of interest. In our case here at 1.04850, to suggest price movement to the downside. On the inverse, going by the data which was printed, we know that the USD is having a struggle on the labor data which was printed. So it would print price also to the upside, and what would invoke our entry is the reaction of candlesticks on areas of interest. In this instance, on hawkish or bullish perspective, when price prints above the 1.06039, it would give us much more impetus to get in for buys. Moving to GBP USD, beginning from the daily time frame, we see that we have a reaction from the 1.26 to 57. Here we observe quite a unique nexus between fundamental analysis and technical analysis, where price gets to react from key areas of interest to get us in for entries. We see before that there was a slight fake out, but price closed above and is now printing to the upside. On Friday, price also closed in this particular asset with the Great British Pound against the United States dollar, with a long wick on the top. And if you go to a lower time frame to see the significance of that, we see a long Marabuzu candle suggesting bearish momentum coming in. Would want to see price break key levels for it to give us much more impetus to get in for entries at the 1.26936 Once price comes and print below, it's likely to continue being in a bearish trajectory until it hits the 1.26 to 20 mark. And when price prints to the bearish trajectory, which would be reaching the expectations of fundamental analysis printed, would be watching out for a key level at 1.27940. Once price prints above this particular area of interest, would be interested to kick in for buys. For Australian dollar against the USD, remember guys, we're still on the USD quote currency, so the USD coming in second. We see that price is in a clear bearish trajectory. Let's go to a lower time frame to see price expectation. Finally broke out from the long awaited consolidation, which we were trying to avoid to trade into because we profit from the clear market direction, either in an uptrend or a downtrend, bullish or bearish by preference. So we see that price is printing much more to the downside. We would want to see more lows being taken out. For example, the 0.63751 to suggest price movement even further to the downside. However, it would be recommended to wait for price to retrace for us to get much more risk to reward to the downside. For USD based currencies, with the USD coming in first, we see that for the United States dollar against the Swiss franc, price from the daily time frame reacted from the key level at 0.89444. Quite a psychological level, if you ask me there, and price started printing to the downside. With the coming out of the mixed labor data, price is printing even much more lower to the downside. Would want to see key levels to the downside being taken out to give us much more reason to get in for sales. For example, the 0.87380. Let's go to a much more lower time frame to see them. We see that right now our price is retesting the 0.88032 resistance, which will flip to be support once price breaks above, to give us much more impetus to get in for buys. On the inverse, when price prints below the 0.87795 in regards to this asset class, would get in for sales and get to ride in until to the next key level at 0.85457. For USD JPY, if we can recall guys, we called out for a sell up here. That was early last week. See, price has been printing to the downside, but wait a minute, what is happening right now? We see we're in some sense of consolidation. Price is neither moving up or down. We are making equal highs and equal lows. Would want to see candlesticks break price to the upside to marry the fundamental analysis expectation. So when price comes and prints above the 150.757, would consider getting in for longs or buys and ride it to the next key level at 1.53279. When price misses expectation and prints to the downside, would be looking out for a key level at 146.644. For USD card, we see we opened with we closed on Friday with a huge Marabozo bullish candle printing to the upside, almost taking out the high at 1.4 1791. We want to see price print price even to the upside to suggest a bullish momentum. Remember, this particular asset is much more driven by the sentiments in line with fundamental sentiments from the incoming president of the United States, Donald Trump, who has promised to put on tariffs or taxes for imports coming from Canada, China, and Mexico. And from the world map, we know that Canada borders the United States to the north, so we'll quite have a unique scenario. For GBP JPY, the Great British Pound against the Japanese Yen, we see we are also in some sense of consolidation. We want to see price print above the 192.064 to confirm the bias to the upside, suggesting change of character from a downtrend to an uptrend. On lower time frame, we see there is a little bit of hesitance to break the lows, suggesting that price might come and close above the 192.353 to give us reason to get in for buys. However, when the expectations are not met and a price prints to the downside, we shall be watching out at the 190.343 price print below to suggest movement of price to the downside. For precious metal gold, we see we closed with a doji or indecision on Friday, suggesting neither bulls or bears were in play. We go to a lower time frame to see transpired. We see from the 4 hours time frame we are in some sense of consolidation or ranging market where price is neither moving up or down. Would want to see areas like the 2665.98 being broken above to suggest movement of price to the upside, or the 22617.02 to suggest price movement to the downside. However, it is important to understand that gold movement on the price charts is understood from a fundamental point of view and a geopolitical point of view. By geopolitical, I mean anything which induces fear and tensions into the market, wars, pandemics, and right now we know that there is some level of tension in the Middle East part of the world, that is Syria, and we also see the intervention of nuclear power in that side of the world. We shall be monitoring that closely on the developments to see how it's going to affect the movement of this precious commodity gold, which is traded widely throughout the world. So this video was meant for informative purposes, educative purposes. Kindly do your due diligence. It's by any chance not financial advice. Do your due diligence and observe risk management while in the financial markets. Hopefully we meet tomorrow, the same place, the same time, to do things the same way that has proven profitability. Until then, take care and God bless. Thank you.